Tesla stock is down another 0.5% here in overnight trading, and you need to hear this information. We're going to break down everything that's going on with Tesla, with Apple, how these two are related or maybe not related, and how Tesla stock could likely move over the next coming weeks. Are things going to get better from here? Are they going to get worse? Should you be buying the stock now? Should you hold off a little while because maybe you're going to get a better deal throughout the month of September? So I think that's very exciting, at least for long-term investors. You need to hear this information. This is analysis that you will not hear on any other Tesla channel. That's why this information is so important. On top of that, at the end of this video, we are going to go over some Tesla specific news that has me very excited for Q3. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. That's very important that you guys do that. Help broaden the conversation. If I missed something, let me know down below in the comment section. So the first thing that I want to talk about is something I've already talked about a little bit here on this channel. It's called the September effect. September is by far the worst month for markets over the last century. And Investopedia basically says that it's just a calendar-based anomaly, that it's kind of psychological, right? People expect a bad September. Historically speaking, you've gotten bad Septembers. There's no real rhyme or reason why September tends to be so bad. But something interesting happens in September sometimes. These are your black swan events or gray swan events that sometimes happen in September. This will shock you. September 11th, 2001. We all know what happened that day. That happened in September. The financial crisis of 2008. That happened in September when Lehman Brothers went bankrupt. The European debt crisis. That happened in September of 2011. The Chinese economic slowdown. That happened in September of 2015. Brexit in 2016, I'm sure a lot of you guys remember that one. That happened in September. Trade tensions, the trade war essentially, that happened in September of 2018 and 2019. The COVID-19 pandemic, this happened really initially in March, as you guys know, but this volatility and sell-off continued into September of 2020 as really everything started to ramp up again. Rona cases started to go higher, and people were fearing that second slowdown, or really lockdown for that matter. The Evergrande crisis happened in September of 2021. So you guys can understand kind of where we're going with this. This is only looking at data from the year 2000. So in 2001, 2008, 2011, 2015, 2016, 2018, 2019, 2020, and 2021. There has been some kind of major event that has happened in the month of September that has caused stocks to fall. Now, I don't know if we're going to get another black swan event, if you will, in September. But if you do get one, it usually does happen in September. And I think that's another reason why people are a little bit shaky here. And I think we might look back on 2023 and potentially say that the tensions, the kind of tech war that we have going on, tech Cold War with China, and them threatening essentially to ban iPhones in China and take this ban a lot further than just government officials, well, that might be our gray swan or black swan event if we look back on it. Apple has fallen 7% in the last 2 days. If this gets worse, it's going to start to drag down the markets in an even bigger way. But there is always a chance that something bigger does happen. It could be related to the banking sector. That would be somewhere that I would be watching pretty closely. We did just get data that came out that shows the portfolio values of your regional banks dropped about 8% within the last quarter. So that's a pretty bad drop, and that's kind of what has caused this, if you will, collateral crisis with the banks. Their assets have lost way too much value because nobody expected the Fed to raise rates to 5.5%, and even if they did, they didn't hedge out appropriately for that. So It's possible, obviously not a guarantee, that something bigger could happen in the month of September. This is the chart that I am very excited to share with you guys. This is looking at data from 1950 through 2021. And it's looking at every day in September. And it shows you what tends to happen. Now, what tends to happen? The beginning of September tends to be okay. It tends to be slightly positive, and then you start to dip towards the 8th, 9th, 10th, and 11th. You start to get a dip in here. Now, obviously, this time around, the dip has happened, well, September 5th, September 6th, so it happened a little sooner than it normally does in September. But what tends to happen? Well, next week tends to be pretty bullish for markets, for stocks. But what happens in the last 2 weeks of September? Big downside. You like my arrow? Let's actually fix that. You tend to get some pretty nasty downside towards the end of the month in September. Why? Quad witching is one of them. Quad witching happens in March, June, September, and I believe December. Once a quarter, essentially. You have 4 different asset classes: options, option futures, stock index options, stock futures. They all expire on the same day. That day is September 15th, and I might have mixed some of those up, but that is the 4 asset classes that expire. This time, it's on September 15th. So that is usually what causes this sell-off. It can be, you know, a couple days before, a couple days after, but around the middle of the month is when you do get that quad witching day. So that's what tends to actually cause stocks to fall, because after your quad witching day, there's trillions of dollars that can be repositioned out there in the markets. And I guess history is not that great, right? A lot of bad things tend to happen in September, and that definitely skews the data here. That definitely, you know, maybe makes it look a lot worse than it otherwise would have been if the last 20 years of bad events in September never happened. But point in being, there's a lot of money that can be moved around after quad witching. Now, this really has me thinking about potential events that could be negative and cause fear to really take hold in our markets. And obviously, the Apple-China situation, that could cause more fear in the markets. But the markets are forward-looking. The markets are really good at handling bad news. Exceptionally good at handling bad news. Markets cannot handle uncertainty, and I think there will be an overhang of uncertainty whether or not China just outright bans iPhones or not. There's always going to be that little bit of uncertainty. There always has been with Apple. But beyond that, what are we looking at here in the markets? So we don't have a lot of big economic data. We don't have any economic data coming out tomorrow that's going to, you know, cause a move in the markets. You do, interestingly enough, tomorrow at 9:30 p.m. have some very big data for the markets, and that is the Chinese inflation rate month over month and year over year. If this goes deeper into deflationary territory, which it's not expected to, your year-over-year number is expected to be slightly positive, up 0.1%. But if you do go deeper into deflationary territory, that just means, well, China definitely going into recession, and the Chinese economy is doing worse than maybe we thought. So this data will be very big, and I'll keep you guys posted. This is probably the second biggest data report that we're going to get in the next week. The biggest data report that we're going to get for our markets is the CPI report. And your core inflation month over month is expected to stay at 0.2%. That's okay. That's fine. We can handle that. Look at your headline inflation rate. That's expected to come in at 0.5% month over month. Last month's reading was 0.2%. So 0.5% on a 12-month annualized basis is, what, 6% inflation? That's a problem. Now, if we come in at 0.5% month over month, that's not great. That's going to be a problem. But I will say the expectation is so high that I doubt we're going to get inflation that strong. So I think this is one of those events where the markets might sell off heading into it. And then even if we get a 0.4 or 0.3 would be my estimate, month over month reading, slightly hotter than last month, but not too high, then stocks can rally from that. And I think that is to some degree likely. And if we were to get a rally after the CPI report on September 13th, that would actually fall perfectly within what has historically happened with the S&P 500. This rally right here, well, the 13th is right here. Draw a line up to that. You're roughly here on the 13th. So that would kind of coincide with historical September performance if the CPI does give us a bullish market reaction. Now, I don't know if this is going to play out in September, but I do think there is something that could be really bad in the month of October, almost 2 months away. And I talked about this in one of the last videos as well, but I really want everyone to hear it. We talked about it like 15 minutes into the video, so I do think it's very important that you hear it again. It is the GDP report, which comes out on October 26th. So the Atlanta Fed is estimating 5.6% GDP. The average consensus analyst estimate is almost 2.5%, around 2.4%. The lowest analyst estimate is over 1%. The highest estimate from analysts is about 3.5%. Back in July, the lowest average estimate for GDP was negative 0.5%. So in the start of kind of recession, right? You need 2 consecutive quarters of GDP declining, but this would be one of them, presumably. At least that was the thinking in July. And 1 month later, even on the low end, we're now expecting 1% inflation. No, something's wrong there. Okay, so I think we're going to miss GDP. Just what I'm seeing in the economy, how people are spending their money, people I know, we're probably going to miss on GDP. And I think that is a major event for the markets that could cause a lot of selling. Because let's be honest, stocks are not exactly cheap right now. Look at the S&P 500. You're still hovering pretty close to an all-time high. You're closer to an all-time high than you are to the lows, that's for sure. About what, 3 times closer to a new all-time high than you are to lows. So we're pretty expensive right now. And that's the other dilemma that we're facing with Apple right now. There's 2 things happening with Apple that I think is important to mention here in this video. On the one hand, China accounts for about 20% of sales for Apple. So it's an important market. If the phone were to be banned, that's obviously a problem, right? Let's not take away from that. But on the other hand, investors are looking at some of these numbers your big tech stocks have given us, and that's a lot of the, most of the time right now, it's negative year-over-year growth, and people are not very happy and excited about that. People are not sitting here and saying that stock deserves a 30 times PE. And I'm talking about Apple. When Apple's just sales are down negative year over year. So I think there is a kind of valuation dilemma that's also happening under the surface at the same time right now. And the problem is, specifically with Apple, it's very much over-owned. Every major ETF and hedge fund in the world owns Apple. You almost have to, because if you don't, and Apple does what they did in 2023, you start to lose clients, because Apple is such a large component of the markets. You have to at least follow the S&P, if not exceed the S&P, or you're going to lose clients as a hedge fund manager. So that's why Apple is so over-owned. Now, I think Tesla, obviously, it's had a huge correlation with Apple. Tesla has fallen over the last couple of days alongside Apple. Now, the selling has not been nearly as bad, and we're going to look at the charts and go over a couple of things here in this video that I think are also important relative to what we're talking about. But if the markets fall, if Apple and more kind of tensions break out with China and Apple, and the band does get larger for iPhones, that's not going to be a great thing for Tesla stock. But I think the number one concern right now is everyone is expecting a good GDP report, and it might come in good. But I think there is not enough people that are realistic about GDP, meaning that everyone is so bullish. If you come in negative on your GDP report, that could literally crash the markets 15% in the course of a couple of days. That's how extreme the selling could be. That's what a black swan event is, when nobody expects something to happen and it happens. Now, I wouldn't bet the farm on that, but even a weak GDP report could happen. A matter of fact, Japan's economy grew at 4.8% in the second quarter on a quarter-on-quarter annualized basis, a smaller growth than the 6% seen in the preliminary estimates and lower than the 5.5% expected in a Reuters poll. So your first number that you just got recently from Japan was 6% GDP growth. They revised that down to 4.8%. Lower than the 5.5% that was expected. And that's the other thing. If GDP just comes in low for the US, the revisions might take it negative. Even if you come in at 0.6% or even 1% GDP, that might get revised negative. So on face value, you really need to see a good GDP report coming out October 26th. And why I'm talking about this now is so you can be prepared for this. Don't go in blind to October and say, hey, why are stocks selling off? Well, maybe it's because markets start to expect a bad GDP report. That's possible, even before we do get the GDP report. Now, we do have some pretty encouraging technical news for the bulls out there, and it is the 20-day moving average on the S&P 500. So your S&P 500 over the past really 2 years or so now has very much respected the 20-day moving average. And even more recently, over the last couple of weeks, it's respected it very perfectly, I guess you'll say. And what I mean by that is if you find support at the 20-day moving average, you tend to at least trade sideways or even higher. Once you break under the 20-day moving average, well, that's a problem. If you find resistance at the 20-day moving average, like you did right here, that's a problem. And you're not like shooting past, and it's not really giving us your false moves. Look, I mean, when you get rejected, you get rejected, and then you end up coming back down. Got rejected, came down quite a bit. Right? And same thing to the upside. If you find support, you're tending to move higher. So what happened today? Well, your 20-day moving average is currently at $443.86 on the SPY. You closed, including after-hours trading, at $445. So you were under this for a good portion of the day today, and you actually closed above it, showing a lot of solid demand. And what happened yesterday is you bounced right off of the 20-day moving average. It looks like there is a lot of demand around this 20-day moving average for the S&P 500. So I do think this China Apple story needs to escalate, or something else needs to happen for stocks to get even more fearful now. The buy the dip mentality, the 5.5% GDP expectations currently for Q3, I think are enough to not crash the markets. I think you really need a bigger event at this point. So that brings me to Tesla. Same story here with Tesla. You're finding some resistance at the 50-day moving average. You're finding a lot of support at the 20-day moving average. There's demand here and there's demand here. So we really just need to see which direction this goes. I would imagine with the delivery event upcoming for the Cybertruck and the record Google Trends data that we're seeing right now for Tesla, this should be a pretty good time for Tesla stock. All things considered, like I said earlier, a lot of your big tech stocks are not growing. Tesla does not have that same problem. Tesla is way cheaper than an Apple on a PEG ratio basis when you factor in growth and compare that to its PE ratio. PEG ratio is price, earnings, growth. PE ratio is price and earnings. So when you factor in that growth, Tesla is way cheaper than your other big tech names. Tesla is also very much under-owned, and I think everyone knows the Cybertruck's going to be a big catalyst for 2024, and it's going to do great things for Tesla's business. So I do think there's positive catalyst for Tesla, unlike a lot of other stocks, especially Apple, which doesn't have positive catalyst coming. So that is going to conclude this segment of this video. Just a quick recap. Seasonality tends to say that next week after the CPI report on September 13th could be pretty bullish. And what that means right now is stocks might sell off tomorrow, Monday, Tuesday. That's a possibility that you get more weakness over the next couple of days. But after the CPI report, you want to be careful because expectations are so high that even if we come in with higher CPI month over month, that could be good news if we just come in lower than the estimates. Okay, it's all about the estimates. And estimates might be way too high on your headline month over month number. In fact, I would say a 90 to 95% chance that the estimate for 0.5% month over month GDP, 6% annualized GDP, or CPI is way too high. So odds are that could be bullish. After the 13th, you tend to get a rally in the second week of September anyways. So that would align historically with the, performance of September. And then the end of the month is a little more uncertain. It really depends on what kind of news we get. And the Fed meeting, potentially. The Fed meeting will be on September 20th. That does historically align when the markets do start to kind of fall towards the end of September. But the biggest catalyst of all is October 26th. And that's the only thing that I think personally matters, minus any black swan event that could happen in September. September's, you tend to get that really bad news in the month of September. So be on the lookout for that. But that's not a guarantee. Now let's get into some very, very bullish Tesla stock news that came out after the bell today. This is actually from drone footage, and Sawyer Merritt shared it over on Twitter. If you guys are not following him, I highly recommend that you guys do. This says a new record $600 million worth of Tesla Megapacks spotted at the Lathrop Megafactory today, preparing for export for delivery. Production continues to ramp up, and you're talking about a massive amount of Megapacks, and we've seen, Megapacks in pictures like this before and drone footage before. This looks like a fresh new batch that should really start to help out Tesla's earnings. And I know energy has started to really help out Tesla's earnings, but it's probably going to continue here. Tesla has removed the Cybertruck delivery event invite from the referral program. It's estimated that they did this because they already reached the maximum amount of kind of tickets for this through this referral program. But Tesla does say that additional tickets will come online as the event date does approach. So if you don't have your ticket now and you do want to go, you're probably going to still have a good chance to get yourself a ticket. Tesla could be on track to deliver close to 50,000 vehicles in Australia this year, for the first time a 150% increase over the prior year if it maintains its current trajectory, industry sales data shows. And that's just, to the bears. How do you have a bearish case on Tesla? It's very hard for me to make one unless we have a deep recession, even a mild recession. Tesla is not priced for great things next year. Wall Street's estimates are 27% delivery growth, 29% EPS growth. When the Model 3 fully ramps, the Highland, and the Cybertruck really starts to ramp, that sounds pretty recessionary-like to me. And finally, Tesla announced 45,000 supercharger stalls in April, so this means they installed an average of 1.4 new stalls every single hour in the past 150 days. So that is all I really have for you in this video, but for those of you guys that made it to the end of this video, I want to give my personal opinion on how to go about Tesla stock right now. Now, like I said, I think Tesla has more good going for it than it has bad going for it. Your 2024 estimates, 27% delivery growth, 29% EPS growth. That's 4 times lower than what we have seen over the past 3 years. The stock is not priced for great things in 2024. So I've said it before and I'll say it again. These last 3 months of this year, you really want to be getting as much exposure to Tesla as you possibly can. Unless you think a deep recession is coming in 2024, like, 7 to 10% plus unemployment rates, then maybe hold off on buying any stocks right now. Now, I don't obviously think that is going to happen, and like I said, I think there's more good than bad for Tesla, especially in 2024, and positive catalysts coming. Now, do I think the stock could go lower? Sure. I think $200 would be a good target to have, but do I want to not buy the stock at $250, hoping that it goes to $200? No. I think odds are Tesla could hit new all-time highs in 2024. That's $150 per share increase from the price we're at right now. So yeah, I'm buying more Tesla stock now. I think it's a very good deal right now. If it gets cheaper, I'll buy more. So you definitely want to keep some dry powder on the sideline. You definitely want to hedge out your portfolios if you have not done so already. Come join us. We are hedging out our portfolios. We are trading every single day, or at least when major opportunities come about. And sometimes we do have some degenerate kind of gambling trades as well. Some of those work, some of those don't. But by and large, you want to be hedged out in your portfolios over the next 2 months or so. But just make it a small amount of your portfolio, because you never know what's going to happen in the markets, guys. So I apologize if this video is a little long and maybe a little too long, but there was a lot to cover in it. Hit the like button, subscribe to the channel if you made it to the end of this video, as well as comment down below, what do you think about the next couple of months in the markets? Make a long comment down there. Just let me know. Let everyone know your opinions. They are very, very, very valuable. But that's going to do it for this video. That's my opinion. That's everything you need to know. My name is Michael Tyler. Enjoy the rest of your day or night, and I will see you in the next one.